Traders, welcome back to another price action trading lesson. We're looking at S&P 500 and mini futures, and we're going to use price action rules to help us navigate the market structure. Normally we do the bar by bar review, but today, because there's so much price action, so many bars on the chart, we're not going to do the bar by bar. So we're going to go through the lesson. It may seem like we're going only based on hindsight, but it's not the case. There's a learning curve. There's a process that you have to go through, a learning process to understand how market works. Because as you can see, we're not marking a setup like this or like this, which generated significant pushes working lower. The goal of a review like this is to understand how market works, how price action rules operate, so you can identify these setups and the structure when the market is developing live. So your first task as a trader is to identify these setups and the structure in hindsight after the fact. And after some experience, you will be slowly able to recognize the structure developed live and take these setups live. Okay, so it's important to go in hindsight, even though it may seem redundant or as it is too easy. It's important for you to understand how market works so you can understand when you're watching this real time. Okay, I've studied this, I've seen this many times, this is where I'm supposed to enter. So we're not just marking trades for the hell of it. There has to be a reason and it has to follow price action rules. As you can see, for example, we have a downtrend working lower series of lower highs and lower lows. This is how the market started after open. And you have a second entry short, new low first entry short, second entry short. So you would think we can take a pullback, but no, there's a short-term uptrend in play and we're above EMA. So I can't take it. In a situation like this, I would need a lower high confirmation setup below the exponential moving average, which never formed. There was the break in new extreme and the downtrend played out. So I'm watching this downtrend right here. I'm considering downtrend over, but I can see market continues to trend lower significantly. And I have to explain why after new extreme, there's so many pushes to new low. So what I'm going to do, I'm going to draw a wide channel because I need to explain why market keeps going lower. And we have massive overshoot. In fact, this was generated by the news. And you can see this is clearly oversold area. You don't need any other indicator, no volume profile, order flow. You can tell, no MACD, by pure candles, this is oversold. Because the push down, the trend down is consistent and healthy. And suddenly, 90 degrees spike down, breaking the trend channel line, oversold. An overshoot can generate stronger correction in the opposite direction. It can break the trend line or sometimes even reverse the entire market. And this was indeed a significant overshoot. So after overshoot, we always skip the very first second entry short. This was horrible signal bar, but let's say hypothetically there's going to be perfect signal bar. I still have to skip it because after overshoot, there can be stronger pullback because market needs to go back to equilibrium. From oversold area back to equilibrium. So we have a break and we expect new low initially for the downtrend. This is what we expect, but there is no lower high, no nothing. Now already we broke above EMA, so now you're wondering why are we not testing the new extreme? But it can be explained because the overshoot is still kicking in. There's a second entry short, but it's above EMA, so I can't take it. And lower high is way too big. You enter right here at the bottom, so it doesn't really feel that great, so you can't really take it. And prices bounce higher again. You have a second entry short, but it's an inside bar and it broke above EMA first. So I can't take second entry short, inside bar, and it broke above the EMA. So at this point, I still expect some lower high or something to test the new low, but market reversed to the upside. And now I will have to ask myself, hold on, why price action is struggling to test the new extreme? You can see there's small support being established and market keeps going higher. So when I was watching this is where I really became patient. I'm pausing, looking to go short. Remember, you cannot fade a breakout because there's overshoot. Overshoot can always contribute to stronger bullish pressure. So you really want setups to form great. The whole time I was looking for failed second entry long below EMA, but as you get more price action, it's becoming obvious that overshoot is really kicking in and it looks like we may not get the new extreme. So there is a failed second entry long, which is also mini first entry short, second entry short. You can consider more aggressive setup because uptrend played out. You brought two legs up, but it's not fully below EMA. It's quite sideways, so not the greatest setup. And the lower high confirmation setup has a bullish bar, so you can't really take that either. And then the confusion happened, because there is no test of the downtrend. So at this point, as you can see, we have moved so far from the initial downtrend. I'm no longer expecting new extreme here. I'm no longer expecting new extreme because there's so much price action. We're so far away from the initial downtrend. I simply have to follow the most recent structure. But when I was watching this live, this entire area, it makes sense in hindsight, but this was super confusing. There was no established trend, no pattern, no nothing. So this is what you have to do as a trader. You have to be able to recognize where there are areas on a chart that the context is clear, and there are areas on a chart when the context is not clear and you have no idea what's happening. Be objective. It's okay. You can admit it that you don't know what's going on, because that's how you're going to preserve your capital. You have to protect your capital first and foremost. And you're going to protect it by being objective and honest with yourself, because you don't want to be gambling. You want to enter a position that follows the rules. You understand the context. The key entry point is confirmed and you can take the pattern. So this was just price action whipsawing up and down, where when I'm watching this, I'm trying to just follow short-term trends. And I want to take second entry at the key entry point, but none of this happened here. Breaking extreme. Then we have congestion area. And once again, you can see we're not going through this hindsight picking obvious trades, because we could have picked this one or the short, but you simply don't know watching this real time that it's going to pivot. There is no key entry point, no reason, no nothing. So this is just congestion and no trade area here. Really nothing is clear. I was also considering, hold on, there can be potential trend like this, something like this, but instead of us testing new high here, market reversed all the way down. So this is where I deleted this and I simply played the most recent structure. So once again, when the structure is unclear, I'm not guessing. It's not acting as a trend range, not really that convincing or confirmed. I always like to wait for some clear confirmed short-term channels and get a second entry at the EMA. That didn't happen again. Breaking new extreme. Massive push above EMA. So this is where I once again start paying attention. Every single time the structure is whipsawing up and down and I get very strong like this, clear confirmed trend. This is where I really start paying more attention. This is where I was looking for first entry long, second entry long at the EMA, because the structure is now clear. I don't have to be worried too much about some bigger pattern because it's just up and down. It's two sideways. So I'm just focusing on the recent channels and I expect new high. I'm following the trend line rule because that's the best way how I'm going to follow the market. What are the intentions of all the market participants? Just following their footsteps, and they're right now telling me that they're going higher, so I want to test the new high. But there's only first entry long, new high was tested. But after new extreme, we keep working higher, under geometric formation. So I redrew to spike and channel pattern. You have first entry long, second entry long, but there was no break above bullish bar. You cannot go long above bearish bar, so nothing. No high low to test the new high, and we have new extreme. So uptrend played out, the spike and channel played out. Okay. Spike below EMA is indicating reversal, and we have first entry short, second entry short, and a new high, first entry long pullback, second entry long failure. Double hypervoltage setup. It's not full at the EMA, but because it's a double hypervoltage setup, two setups in one, I marked it red because the more setups you have to confirm it, the better. We've been better had it close at the EMA fully, but decent reversal enough. Market started trending lower. We can't even break the EMA, so you cannot have these candles on a chart without a pattern, so I need to locate some convincing downtrend, and this is a very strong downtrend. So when we're watching this, we expect market to right now be in a bearish mode, so we're only looking for reasons to go short. There is no bullish bias whatsoever, no bullish reason for trade whatsoever, so you just have to follow the correction. The short-term correction is in play. Break, push to new high. This is not fully double trap because double trap needs to close below EMA. The close of this candle is above EMA, so I can't take it. I would need some lower high confirmation setup. That didn't happen. Can I get lower high here? That didn't happen again. Very few setups. Actually very surprising. There's so much price action. Market is moving so fast, but we just don't have that many great setups, and the signal bars are bad. That's the worst part today. I see a lot of good trading opportunities, but the signal bars are so poor quality today that I simply didn't find a way to enter a lot of great setups context-wise. The context is there, but there is no good signal bar, so I'm just forced to sit here and watch this develop. Breaking extreme. Market is going sideways. You have first entry long only, second entry long below EMA. So market cycle says after breaking extreme, there can be correction reversal, and we have flat EMA, and we have push down, push up, push down, push up. So we can predict new market cycle, a trend range consolidation. Once again, we like to skip these areas of indecision where EMA is in the middle of the bars, resistance held, and we have a filled second entry long, which is also mini first entry short, second entry short. So you can consider, but it's above EMA. It's above EMA, so it's more aggressive because there can be some random additional push up, you never know. For this reason, it's better to wait for the push below EMA and a lower high confirmation step. This is a great setup. Lower high confirming this filled second entry long. The resistance held, we are in trading range, and the market is heading lower. Then we have short-term uptrend breaking new high. I didn't take this setup because it's a fourth entry short. Okay, so it's not really a textbook high probability setup, and sometimes you may have seen me taking a fourth entry short, counting this as a second entry short, and that was because there was a visual aspect to it. There are broad two legs, but here I see many smaller legs. I can't make a case for clear like broad two legs. The visual aspect of two-legged pullback is not really there. Sometimes you can have like third entry short or fourth entry short, but when you have really clean broad two legs, you can treat it as a visual second entry. That wasn't the case here because it was just a bunch of small pushes working higher. I was looking for a lower high that never formed, breaking new extreme for the short-term downtrend. Uptrend breaking new high. I don't think we can take the lower high. There's some bullish imbalance. Market trending lower, so once again we're looking for second entry short at the exponential moving average. Then we have an interesting scenario because we have a consolidation. From the failed breakout we have extremely strong downtrend working lower. In fact, you can't even touch the EMA, and this is what we call breakout, pullback. The support is acting as a resistance now. We tested the important key level. This is also breakout pullback combined with the new low first entry short, second entry short. There's a resistance here. Can we get lower high confirmation setup? We have a lower high confirmation setup here, but it's so far from the EMA. Inside bar, I can't take it. Felt second entry room, but the new low is already in place, so I can't take that as well. I'm gonna draw a broader channel now because the trend is getting quite strong, minimal pullbacks, it looks consistent, but there is no entry. There's a first entry short, second entry short, but there is no trigger below this bar, and even with the trigger, the tail is terrible, so no entry here. Bullish bar, I can't sell below bullish bar, so I want to see a lower high confirmation setup of the triple test, but the lower high is bullish doji. So this is one of those examples where the context was clear today, because the key entry points are holding prices, the trend is down, correction phase is about to end, but my signal bar was a bullish doji. I wouldn't be too worried about consolidation because as long as you're below EMA and the EMA is not in the middle of the bars, it's always lesser congestion. But the signal bar is so bad on my charts. Once again, great context, no way to enter. We're breaking the downtrend, so we expect market to test the new extreme. No, nothing here. I want to see a lower high. We have a lower high confirmation setup, but it's so far from the EMA, I can't take it, even though it worked for a scalp. Then you have first entry long, second entry long, failure. While the downtrend still needs to be an extreme, but you have to use deep limit order. The bar was filled. You cannot enter such a big bar so close to the lows. You need to use limit order. And then we had two legs down with very strong bullish reversal. Once again, I'm going to redraw some channel like this. Actually, I'm going to draw a spike in a channel like this. Second entry long combined with the triple test, but the signal bar here is doji. You have to enter the third bar, you know. Bad signal bar here again, maybe decent enough. Your stop loss, however, has to go all the way here. And of course, the cleanest setup happens quite late. Textbook second entry long at the EMA. Massive push phase, but it's simply way too late here. So this was the structure for today. So many bars. So once again, I apologize for not doing the bar by bar. I really like going through the chart when the chart is covered, because it really helps us to practice what's it like to watching this live. But there's so many bars, it would take forever, and on top of that, there are simply not that many great setups, so you're just mainly being patient and watching the choppy chart. So if you didn't take that many setups today, you're not alone, because for the most part the day was quite choppy. There's some few good ones, There are a lot of great setups context-wise, but on my chart, the signal bars didn't really cooperate. But either way, I hope you find the review helpful. I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. So good luck in your trading.